I think we've probably hit a low point of inflation here in the U.S. Core PCE has been stubbornly low, but if you think about the backdrop, we could have some fiscal accommodation coming out of Washington over the next 6 months, and I'm more optimistic than most on that actually coming to fruition. You have a labor market that continues to tighten. I mean, the wage growth number that we've seen was lower than expected, but I think that will continue to firm up. And I do think we're going to unleash some CapEx in 2018, which should stoke inflation a little bit higher. So I think we're going to gradually move to the 2% level of core PCE that the Fed has been trying to hit for quite some time. I think volatility should pick up from here. We're at generational lows as far as vol is concerned, so I think the path from here is probably up. But volatility has been low because of the backdrop that we have, right? If you think about volatility, it usually heightens around recessions. And the recessionary risk is very low in our opinion. So at ClearBridge, we put together a recession dashboard of 11 indicators that will typically foreshadow an upcoming downturn, and only one of them is flashing a warning sign right now. So we think that the odds of a recession right now are extremely low. But if you also put on top of that really strong earnings growth, I mean, earnings growth has beat to the upside for the last 3 quarters. I think that's going to continue into 2018. You also have global central banks that are tightening, but they're not tightening very much to choke off the economy. I think that all kind of coalesces into a backdrop of low volatility. And then also share buybacks are heightened. That's also a volatility dampener. Forward guidance, I think all of these things are just pricing in volatility lower because there really shouldn't be a lot of fear in the markets. As far as investor sentiment, I can tell you I travel around the country, a lot of different geographies, a lot of different levels of sophistication from an investor standpoint, and there's a lot of skepticism out there. People are really scared that we're close to the abyss and that there's a big drop ahead of us, and that's just not the behavior that you see at the end of a bull market. And it's kind of head-scratching that in the 9th year of this expansion, you still have so much fear. But just from an anecdotal standpoint, I think that there's still room to go on an upside just from a sentiment perspective. I think a lot of people are concerned about the end of this bull market here in the U.S., but typically at the end of a cycle, you see some behavior that's being evidenced. You see higher M&A activity, higher IPO activity, heavy inflows into equities, spreads widening out. You're just not seeing any of those things transpire right now. So we think that there's more room to run on the upside within equities. And quite frankly, to see an end to this cycle, you need to see one of the following things happen. You either need to see the economy start to roll over, which we just don't see in 2018. Earnings roll over. We think earnings are going to be strong next year. You need to see the Fed tighten a lot faster in order to choke off this economy. Or you need to see valuations get more stretched from here. And it's not to say that some of those things can't happen over the course of the year, but if it does, it's probably going to be 2019 or 2020 before you see a substantial downturn in this market.